Hey, good morning or good day, everyone. My name is Bobby Taruc with Keller Williams Premiere Properties. I was supposed to have one of my lender partners in this session or streaming today, but somehow he's not here yet. We'll give it about 5 minutes for him to be able to hop on. But we wanted to have a conversation with him on his specific loan products and enabling buyers to be able to fund their purchase of a home. I'm not sure if it does commercial properties as well or investment properties, but we'd love to be able to find that out. His name is Andy Gaston again from Highlands Mortgage. It's a company based out of Phoenix, I believe, and his support team is in Las Vegas or it's either Vegas or Phoenix, one of those two cities. But again, we'd love to be able to talk to him. Hopefully, he hops on here. Currently, the market is pretty robust right now, especially in Chicagoland area. Again, there's a lot more buyers than sellers, and we have specific clients right now. We're working with both buyers and sellers. And again, the major dilemma for sellers is that where would they go? So, hoping to have a conversation with Andy Gaston again with Highlands Mortgage and how he has specific loan products that could mitigate that problem. So also we have some strategies as well with Joan and myself on how we can solve those specific problems where we can, as an example, we can do a reverse contingency with the seller. In essence, what this means is that the seller would be able to proposition additional contingencies that may look like to the advantage of the seller, but we're really looking for win-win solutions with both the buyer and the seller as we move forward, as we try to solve for this specific problem of lack of inventory with the lack of listings. My last recollection of the statistic was that we're 50% less in inventory compared to 2 years ago, year over year. So I'm not seeing Andy Gaston here. We will end the broadcast right here, and hopefully we will be able to. Oh, he's here now. So let's see him hop on. Give him a few minutes. Let me see if I can add him on the stream here. Let me do this. Hey, Andy.
Yeah, how's it going? Sorry for a little late.
Good. Oh, that's okay. We're actually live now on our YouTube channel.
Okay.
So just in time here.
So if I open up another screen, do you still see
Yeah.
me?
Yeah, you should be able to share if you are going to share a browser or a document or an application, you should be able to do it.
Okay.
Can you hear me okay, by the way?
Yep.
Okay. Let me introduce myself again. I kind of rambled for the first 2 minutes while I waited for you to join. Again, my name is Bobby Taruc. We'll highly likely edit this particular video with my editor in the Philippines. But again, my name is Bobby Taruc with Keller Williams Premiere Properties. We're a husband and wife team out of Glen Ellyn. My wife Joan is not with me today. With us today is Andy Gaston, now again with Highlands Mortgage. Andy, if that's okay, if you could introduce yourself.
Yep. My name is Andy Gaston. I'm a VP of mortgage lending at Highlands Residential Mortgage. I've been in the industry for 18 or so years now. Starting in with Fremont Investment and Loan, then actually was a realtor for a little bit for a couple of years when I was living in New York in 2000. Well, last couple of years when I was there in 2010, 11, and been working for big banks, small banks, and anywhere in between. So, been happy to share the experience that I have with everybody.
Yeah, Andy, thank you for joining. So I don't really have a prepared script where this conversation will go, but
Mm-hmm.
if we can talk about, we know that the market is really a seller's market still and continues to be. And
Mm-hmm.
even we were recently in Florida, and the market's
Mm-hmm.
the same out there. Same with
Mm-hmm.
Chicagoland. I would imagine it's the same for Illinois.
Mm-hmm.
Can we talk about specific products that you have in your
Mm-hmm.
portfolio that will allow the buyer to be in a strong position, whatever those products are?
Yeah, so there's a few things that we have to help make it easier for somebody to buy a home. There are some things that I could mention. The down payment assistance that does help. That's still available in Illinois with IDA. That's $6,000 to $10,000 down payment assistance. There's also products like I have a list here. Well, we use the credit sweep using the home equity line of credit to buy the property and not have MI. That helps. We also have. Let me put this in my screen so you can see my face while I read it. Um, there are certain programs like bank statement programs, which is very popular for people that are self-employed that might not have a lot of income with their tax returns. As a matter of fact, when we do this program, you don't even show tax returns at all. You just show 12 or 24 months business or personal bank statements, and we literally count the deposits on those bank statements. There's also non-prime, so for people that went through bankruptcy within the past 2 to 7 years, you are able to buy, albeit a higher rate. There is a program called the DSCR. This program is for investors that would buy property where the investment property itself is already able to pay for the mortgage. So that kind of makes sense. As long as 75 to 100% of the income from that investment property is already covering the mortgage. So it's a little less risk for the bank. There is also a foreign national program that we do have. So somebody from outside the United States that live outside of the United States is buying to the United States. That's available. We are able to work with people with ITINs. So with doesn't have a social security, but with an ITIN, they are able to buy a property. And what we were talking about before, these are very popular in Florida that you mentioned, the non-warrantable condos. So these are the ones that like there are condo associations that uh, Fannie or Freddie would not be able to lend for, but because there's, for example, there's more investors than people that live in the property, so which typically denies a loan with Fannie or Freddie. There are programs that you are going to be able to buy those types. So yeah, those are the programs. I could go in specifics if you want, Bobby, with those particular ones. But those
Uh,
are the ones
yeah.
that are available for everybody. That have to think a little bit of creatively in order to buy a home.
Well, I think I'd like to focus, if you could, on something similar to, if you do have a product, something similar to a bridge loan, where
Mm-hmm.
in essence we can proposition and position the buyer more
Mm-hmm.
like as a cash buyer. Is there something like that where you can assist the buyer?
Yeah, there are some bridge loan available as well. Same with the same company. So these types again, they're not Fannie Freddie or they're with wholesale lenders. So there are companies like Deep Haven or companies like that do have those. So the bridge loans is not typically available for a lot of the banks or even the brokers. But if for example, if you would buy a new construction and there's that time in between that you do that's what it is. It's time between where you have to fund while they're in construction. So there's a bridge. So well during that time that you do need to provide a down payment or the developer would ask for money already up front before they even start doing the construction. Yes, that is available as well. So That makes it easier for somebody who doesn't who might not have who might not have savings yet and does need that bridge loan. Well, getting the whole home for the loan for the whole home, that would be available.
Yeah, thank you for that. Yeah, we just, like I mentioned to you, I think I may have shared with you. So recently got back into the area, and actually, Joan will be showing some homes today
Hmm.
for a specific buyer that we're working with. What are you seeing? I know what we're seeing, but I wanted to see from a lender's perspective, what
Hmm.
are the current challenges that you're experiencing with your clients, and how are you able to help them?
Well, there are many nowadays. It still continues to be a seller market. Um, so as you probably experienced, when a client or when a home buyer is interested in a property, there are most likely 5 to 10 or more other buyers that are interested in the same property. So how would we help with that? I mean, getting the updated pre-approval, that helps a lot. The communication between me, you, and the listing agent is very critical. Just to really affirm and have them feel good about the pre-approval, that the pre-approval is legit. Like, we did take a look at the income docs. We did take a look at the W-2s, the pay stubs, the bank statements, and we didn't just provide a pre-approval without seeing those and just doing it random. So that means a lot. I would think with a listing agent, and really letting them know that you could close fast. Which a lot of the listing agents wants to know and hear that the company that you work for will be able to close 30 days or less if needed. Typically it is 30 to 45 days, but if they needed to close, let's say, for example, we're on March 3rd now, and the seller wants to close before the end of March, so it's obviously a little bit less than 30 days. We're going to be able to do that.
Yeah, absolutely.
Things like that.
Yeah, so Andy, one of the things and the challenges as well, similar to last year, was that uh, because the buyers are going over asking price,
Hmm.
how do you solve for, and what kind of situations have you encountered when there's an appraisal gap? How are the lenders, or you specifically, how are you able to tackle that?
Well, all banks would always lend on the lower of the purchase price or the appraisal value. So there's no way around that. So I would start with first looking at the listing agent, especially looking at the comps. I would like to know, like to think that they already looking at before they even put the property in the market, right? So you already have an idea what the property is what the value of the property would be, first of all. So if it does, like for example, you sell a property for 300,000, and and the value came in lower, let's say at 290. Again, the bank will always lend at 290. But if the agents, and it's a partnership, right, with the agent and the
Mhm,
lender.
mhm,
If the agents do think, hey, there are comps that do show, and not only comp but like comps. What
mhm,
I mean by that is, same bathroom and bedroom count, roughly same square footage, same age, same area. It's not across a highway. It's not across a body of water. It's a light comp. It's the same as the property you're selling. If there is a sale within the last 6 months, within half a mile of the area, and there was one for 300,000 or more, communicate that with me, and I am able to actually ask for the appraisal to check again and say, hey, could you use this particular comp and have the 300,000. Now, is the probability of that happening good? I'm being honest and say no.
yeah,
But it has happened. There are some appraisers that will take account, especially. Well, let me say this though. I've seen it. I've had more success with appraisers taking comps that is not on the original list
mhm,
if it just closed recently, because sometimes there are ones that literally close a few days or within a week of providing the appraisal. And
Right.
if they do show one that just closed recently, obviously the appraiser won't be able to use it because it hasn't closed yet.
Mhm.
So, and this is a good actually information for the public is that, when they say, hey, there's this property that's across the street from me, that's in the market, using this the same example for 300 or even more, right? Like 310. Why did the appraisal go 290? Well, it's because it hasn't closed yet. So
Right.
we don't, and though they don't count yet. For all we
Mhm.
know, they'll be sold for less. So
Yeah.
those are the steps that somebody like me would go through. When there is a dispute with the value.
Yeah, absolutely. I have seen there was, I can't remember which particular Facebook group this was posted on, but
Hmm.
there was a situation where an agent actually requested for another appraisal or different appraiser,
Hmm.
and then that they were able to appraise at value of what the purchase agreement was. So there are some instances like that where the buyer's agent can request, or the client for that matter, the buyer client can request for a second opinion
Hmm.
in terms of the appraisal process. So,
Hmm.
and that was a positive outcome, by the way, in
Yeah,
that particular instance.
it doesn't happen a lot, but it does happen. Especially if you have a very good case. Again, it's really a comp. It's really data that's there currently available even to the public, where it's a legitimate like comp that's again been sold very recently. More recent, the better, and the closer to the property, the better.
Yeah, absolutely. Hey, I want to step back a little bit. We
Hmm.
know that, I believe it's still true this year. Last year, more than one third of the transactions were driven by the millennials. More than
Hmm.
one third of those transactions as well were first time home buyers.
Hmm.
So, as you coach, what can you tell the younger generation to for first time home buyers? What can you tell them as they think about making their first home purchase?
Hmm.
What can you coach them?
I've come across this a lot of millennials. You're right, very more so recently than the past. Um, First thing, don't assume. um, a lot of things that you may read online on their own research may not even pertain to them.
Right.
Um, you don't need 20% down to, a lot of it's education. So a lot of it, you don't need 20% down to buy a home. Although it's, if you have it, it's good. You don't pay mortgage insurance. You only need really 3.5 or 3%
Mhm.
down payment. And then even if you couple that with down payment assistance and seller credit, you may not even have anything at all. So, with that particular example, a lot of them get stopped in buying a home just because they think they don't have enough, when sometimes there is enough. In terms of credit score, they would stop themselves and say, hey, I don't think my credit is good. I don't, I shouldn't buy a home. And I would encourage them to not assume and do apply and try.
Mhm.
And because they don't realize a lot of these the pre-approval process is really for them. It's more so for them than us. They get to learn so much about themselves.
Right.
Really, like how much can they afford, what's comfort for them, what kind of debt they have, what's the credit score, what do they need to do to get a higher credit score.
Absolutely.
Because worst case scenario, we only need a 580, for example, for an FHA to, when you buy a
Mhm.
home. So
Mhm.
let's say they have, worst case scenario, it is less than 580 and they have, let's say, 550 or 570 or so. um, well, first, at least they know. That's, knowledge is power, right? So at least they know, and
Mhm.
and then we can also let them know what they need to do to get over that hump, to get over the 580, and maybe even get to 620 and 640. And at that point, you get more stuff. You get the payment assistance and such, and maybe even able to do a conventional loan, um, which is, I know agents love, especially when clients would buy condos because it's a little bit easier. You don't have to go through FHA approvals and such.
Right.
So there are things like rapid rescore.
Mhm.
It takes away the guessing game of what you need to do, how much you have to pay, what you need to pay. in order for you to get the particular score. It's beautiful. People guess like, oh, maybe if I pay this, less than 50%, maybe I'll get to this particular score. It will literally tell you if you pay $182 on this particular credit card, you will get to 600 credit score. It's beautiful.
Right.
Um, and there are credit repair companies that we have partnered with, that you may be a little bit familiar with, that instead of spending $300-$400 on attorneys to fix credit, there are options that's less than $100. We do know ones that are $50, but they're, for example, they're just online, they're automated.
Right.
And what we found with one particular one is about $89 a month, and they have attorneys that would draft all these dispute for you. All you need to do is just send them to the credit card companies or collection agencies or whatnot.
Mhm.
And that's been very helpful. So a lot of my clients have seen credit scores from the 500s getting all the way up to 700s, and that obviously opens up options for themselves. Um,
Absolutely.
you know, Heck, you're able to buy a home, which is the ultimate goal, right?
Yep.
So going back to your question, there's so much to explore about themselves and to really learn about themselves, and have us as loan officers and realtors as well, help us help you,
Mhm.
because really the more information that we know about yourself, your income, your debt, credit score, type of property you want, where you want to buy, and things like that. Really, we're partners. We're not here to not go where you want and what we want. We're aligning our goals with yours. So, and that's our goal, right? We have a fiduciary duty as lenders and realtors to really take care of you,
Yep.
and get you to and align our goals to yours and get to where you want to be, which is homeownership.
Yep. Absolutely. So, Andy, going deeper down into the detail right now, as that transaction, let's say you already have a contract, how
Hmm.
early in the process do you inform your clients that, look, this will be your expected amount that you need to bring to the closing table? Because some people may get a sticker shock. Oh my goodness, a title fee is $3,000 or
Yeah,
2,000, or title insurance is another
yeah.
675. How early in the process do you prepare your clients to be have an awareness on how much they need to bring to the table,
Yeah,
closing table?
even before that point where you are negotiating for a home, or even when you get a purchase contract, going back to what I said earlier, it's right in the pre-approval process. It's again, you really learn a lot. You would learn those things, those questions. What are the down payment requirements? What are the closing costs? um, those two combined is what do you bring in the table, at
Mhm.
closing. What does entail, what are the title fees, what's the origination fee, what's all these things,
Appraisal fee. Yep.
appraisal fee, roughly, approximately 450 to $500 or so.
Yep.
um, Heck, on a refinance, there are times that you don't even need an appraisal, and we need to inform them that. So yeah, there's those things we discuss in the very beginning, right in the pre-approval process. I typically do it at the same time as informing them about what the monthly payment would be.
Okay.
What the principal and interest payment would be. Adding the homeowner's insurance and the property tax,
Yep.
what we call PITI, principal, interest,
Correct.
taxes, and insurance. Is basically what you pay when you pay your mortgage. Those discussion is coupled with down payment amount and the closing costs. So again, in the pre-approval process, I think it's fun. It's really learning a lot about what you're getting yourself into, and what more about yourself, and what you need to prepare for, and that's
Yep.
a big part of it.
Absolutely. Andy, have I think I still have a paper copy of the Ten Commandments of
Yeah.
what buyers should
Yes.
do
Hmm.
as they go into contract phase, but it bears repeating. And if you want to highlight just five of the Ten Commandments, feel free to do so. But I think it bears repeating in here that what's your specific counsel to buyers as they go into the contract phase?
Yeah, I don't have them memorized in my head.
Mhm.
One thing that sticks in my head really big is the
Mhm.
car. So
Mhm.
when it's huge because you have no idea, in my daily work, you have no idea how many times I've seen people buy a car recently before buying a home.
Wow.
So I would say number one, if you really can, and I get it sometimes, you kind of need to get a car.
Hmm.
You need to go to work, right? You need to be able to
Right,
get to
right.
work.
Hmm.
So I get it. It's an essential need. But quite honestly, you don't have to really spend $50,000 on a car, especially if you're buying a home. So
Right.
if you can, do not buy a car before buying a home. If you really need to, be a little conservative with it. A lot of this is again planning.
Hmm.
Don't be opening up credit cards also when you buy a home. Because a lot of people think that they need these history or trade line, not
Hmm.
realize they already have it. So
Hmm.
I guess again, before you do all these things, check with your lender first, and
Right.
and see, you might not even need to do that stuff. um Third, that comes in my mind, and this has happened before, and it's worth mentioning,
Hmm.
is buying furniture before you close.
Right.
And I say this, and you almost appreciate the fact that they're thinking ahead, right? Like,
Absolutely.
and, it happens, right? When you want it when your first day, when you close, and right when you step foot in the home that you own, that you
Hmm.
would have furniture right away or new furniture. Do not buy furniture before you
Yet,
close.
yet, yeah.
You might not even get to the closing table if you do that.
Hmm.
Um, it just reminded me of somebody said, well, going back to the car, do not buy a car before closing because you might live in it, because you might not have that home and just live in the car. That's a joke.
Yeah.
So don't do that. Switching jobs. Do not switch jobs in the middle of buying a home.
Hmm.
Not to say that if you switch jobs and you're in the same industry, um, it's I hesitate to say it's okay, because it is okay. It's not like you're not going to close. If you're a nurse and you're going to another hospital and still be a nurse, it's
Hmm.
okay. Although it might delay it, because then now we might have to ask for the pay stubs.
Right.
So but especially if you are a nurse and all of a sudden you want to become, I don't know, an IT guy or something.
Hmm.
No, no, do not do that. Um, how many is that already? Three or four? We got one
I
more.
stopped count. I didn't count. I'm
Okay, so
sorry.
one thing that I have in mind also, and this is big, and this has happened as well. There's a big difference if you are employed as a self-employed person
Hmm.
and as a W
Hmm.
two. So if you're a W two employee and then decide to want to switch to be self-employed,
Hmm. Start,
um,
start your own business.
start your own business. I mean, again, it's admirable that you're thinking to be an entrepreneur. Personally, obviously, we're entrepreneurs. We like that. But if
Hmm.
you're buying a home, for example, you're a consultant, you're getting a W-2, and all of a sudden you want to own your own business and quit that W-2 job and become
Hmm.
self-employed. There's a big no-no, because we do need a 2-year history as a self-employed uh,
Okay.
person. At the very least, 1 full year. So, for example, if you decide to do one now,
Hmm.
March 3rd, 2022, you will not be able to buy till 2024. But if you were
Yeah.
self-employed, let's say November or December 2021,
Hmm.
then you the full year of 2022, then maybe be able to buy 2023. But my point is, don't switch on that. It's huge for us, the self-employment and the W-2.
Yep. Absolutely. Hey, Andy. I know I have a lot more questions, and there's so much more to talk about.
Oh,
But
we could talk about this all day.
yeah,
I could talk mortgages and real estate all day.
here's my last few questions for you. So, what is your philosophy, and that's on the ticker, by the way. What's your philosophy and mindset, and how do you differentiate yourself with other lender partners? I mean, what's Andy Gaston's value add?
at the very least, the mindset is really putting myself in the client's shoes and have their best
Mhm.
interest in mind. Um, I'm on the client side, not the bank side.
Right.
So, and remember, I have bought before. I have invested in property before.
Hmm.
Um, I also want to pay off my mortgage as fast as possible. All these things that a lot of clients are concerned about.
Hmm.
I want to pay less in mortgage as much as possible. I
Right.
want to have the lowest rate for you as much as possible.
Right.
Honestly, it's simple for me. I care.
Yep.
I care.
Absolutely.
Um, and it really would do whatever it takes for the client.
Yep.
Whatever's best for them.
Absolutely.
Even if it means less. And I will say this, especially for this niche product that I'm doing with a HELOC. Um, and some of you that know me, especially the past year and a half, maybe heard me talk about this, where, for example, I use the home equity line of credit to pay the first loan, basically a non-amortized loan to pay the first loan. First loan is amortized, which means I don't know if people notice when they pay their mortgage, for example, most of it goes to interest. So I have this program where you don't have to wait 30 years. In 5 to 7 years, you're done. To be honest with you, when they do this, I use that example because people don't realize when they do that program, we actually make less. We actually make less money because
Mhm.
we get paid. Believe it or not, we don't get paid on interest. So it doesn't mean that you have a higher interest rate that we get paid more. We get paid on loan amounts. So with this program, I even lower the loan amount, and we get a HELOC. HELOC, we don't even get paid at all. The reason why I mentioned that example is because we make less on that particular program, but that's not what I care about. It's actually good for you. It's good for the client. So, I'm just trying to make a point that, yeah, I will do whatever it takes and care for the client more than even really the bank.
Yeah, absolutely. So you really do care about people. Those loans are not loan numbers or transaction numbers. They're
Hmm.
people, and you really do care about
And
people.
let me mention that, say we go through a purchase transaction. Once you're at closing, I don't go away. It's not like our relationship stops. I'm
Okay.
still a resource for you and your friends and your family. And I tell people that it doesn't mean you're close. It means you still ask me and still call me whenever you want.
Hmm.
Well, that's another thing too. And if people do take advantage of this, I am available
Yep.
um, after
Within
hours or even on weekends.
Yeah, within reason. So if
And within reason,
there's an
yeah,
opportunity to refi if the rate further
mhm,
goes down, then you're available. You're right there.
correct. And especially for people that are buying that need an updated pre-approval, for example, on the weekend, you know, um, obviously I don't work for like a 9 to 5 bank where I'm not working banker hours, so I am still available to update that pre-approval or even let um, what the payment would be if you do buy that particular home, which is a typical question they get when people are looking for homes, even on weekends.
Yep,
So
absolutely.
and that comes back to where when I would be buying, right? When before I was even in the industry, my first home I wasn't even in the industry yet, but um, yeah, that's what those are the things that I want my loan officer to do and be there, right? I just basically put myself in your shoes.
Yep, absolutely. So again, our guest today is Andy Gaston. I will put his contact information in the description of the video on YouTube. And then if we do cross post this on our Facebook page, we'll make sure that his contact information is in the comment section or the description of the video. So Andy, thank you for the conversation today. Hopefully that's not the last time that we'll have this,
Yep.
and hope to see you soon.
Appreciate it, Bobby. Thank you so much.
Thank you. We're going to
And
end the
thank you.
broadcast here.
Okay. Take care.
Thanks.